The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on today? Well, we're off 7 after being back up to 2,800 on the S&P cash. So we're at 2775, 2776, I guess, with a round. Looking to go back and test the low of the day, which is 2770. The one interesting thing is that the volume was poor on the way up. The first leg down, it was slightly better. It popped back up and tried to push higher. And right now, normally, like we say, I like to see something in the neighborhood of 2.2 to 2.4 billion shares if we're looking at just the New York Consolidated tape. If your wife or your husband told you that your kid had a 104-degree temperature, you'd probably be thinking you were going to go to the emergency clinic instantly. What if the kid had a low temperature? There was nothing going on, and it was like 95 or 94. 6 points higher, and everybody'd get freaked out. And a couple points lower, wonder if people freak out just as much. Well, we got that condition today. We got less than 1.5 billion shares. So there is something major going on. I don't know if it's a heart attack or the prelude to an all-out assault on higher prices, but I am betting that it is an all-out assault on lower prices in the coming hours. My thought is that we're probably going to see the push into lower prices continue through about mid-afternoon tomorrow. Maybe a little bounce on on Thursday and Friday, and then see more selling come next week, but we'll see. As I said, the cruelest thing that a market can do is frog boil you. And if you're just looking at the highs of the day, you're not thinking much has happened. But if you're looking at the volumes, well, you'd probably say that you're a little bit scared. Anyway, 2775, light volume. I'm talking about volume that you had the day before Christmas. This is how pitiful the volume is today. So again, tried to go higher, no volume. Tried to go lower, volume mildly increased. And then what happened? We went higher, and the volume literally shut off. I saw a lot of stocks move that would take a buck or two to move them. It would take 100, maybe 200, maybe 300,000 shares to move them $3. They moved that on nothing, on 50,000 shares. Pretty good indication that what had happened was that the market makers and stock operators tried to run the shorts, the weak-handed people out one last time before they turned tail and ran, exiting stage left. What was it? What was that lion's name? All I can think of is Murgatroyd. Oh, Murgatroyd. Maybe somebody in the den remembers it. So anyway, what do we have? Well, we'll take a look at it. Today's close is going to tell me a great deal more on options, but nothing's really moved much higher. I thought maybe 2680 to 2700, still a possibility. Certainly, I would say that the setup right now says an 80% possibility that we at least hit 2750 here in the next 24 hours, in the next trading day, 6.5 hours of open market. So we'll see what happens. But yeah, I'm thinking that we get a flush probably around 2750. And I don't know if that happens today or it happens tomorrow. And at that bounce at 2750, if we get any at all, it's going to tell us a little bit about what the rest of options expiration is going to be like. If you tuned in on Friday, nothing much different. And that is that options have continued to point lower. Volumes have been poor. And today, I think all you could say on the volume on a push higher was you had to call bovine poo. That's the cleaned up version. I'm calling bovine poo on this volume. It is not allowed to go up on nothing like it tried to today. Anyway, 1.5 billion shares on the NYSE consolidated tape. If you're looking at the CBO equities market, which had just under 7 billion shares yesterday, we have yet to crack 4 billion shares. And so we've got, what, an hour and 49 minutes left in the day. So we'll see. But again, not uncommon, especially off the tops, especially when everybody assumes that the market was fine, that they held through the worst part of it. It's gone back up to the highs and nothing's happened. It tends to be very gentle on folks and not scary. You got to set the hook if you ever went fishing. And so far, the market looks beautifully set to set the hook and hold a bunch of people in this in a pullback. Now, I'm not long-term bearish in the market. The economy is doing well, everything else happening. There's only one thing that's truly changed, and that's higher interest rates, and those higher interest rates will probably be going higher more than the market thinks, quicker than the market thinks, just because the economy is doing so well. And cursed with good news, I think we are. Anyway, this thing will pull back. We'll find some kind of equilibrium, and then maybe we'll see probably the best economy in the last 100 years soldier on. But we need to correct for the artificially low interest rates. And right now, that's kind of what I think the market's trying to digest here. It's kind of like that. So we'll see. My guess is that we don't get the massive destruction this week. My guess is that we set up going down probably on Monday, maybe get a little bounce Tuesday, light volume again Wednesday in the FOMC meeting. We get some kind of a little hawkish hawkish talk. And that's enough to make people think that interest rates are going to go up a little faster than everybody else thinks. So we'll look at that. We'll look at a bunch of other things. We'll look at history when we come back. And, of course, just keep a close eye on this market, because my guess is it's going to start moving rather quickly. We're down 11.5 points on the S&P right now on the cash. We'll come back, and we'll start telling you more as we did yesterday, which is proof of lighter volume tests of highs. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, and I didn't have a good one, but I did have that one. We'll play it again here shortly.
So exit stage left.
Anyway, assuming the market players are going to exit stage left, Mr. Snagglepuss there, oh, gotta love him. We're off 10 and 11 points on the S&P cash. NASDAQ's off 53, Dow's off 60, 61, and the Russell's turned southbound, down 2.5. Crude oil's off 63. Gold's up about $6. Crude's down $1. So, gold's just holding this range. Could drive a lot of people insane. You never know. Anyway, we're looking at it. We'll keep an eye on the volume, see if it picks up at all. But pretty pathetic, 1.55 billion shares so far in the NYSE, when normally on a big day you'd want to see something like 2.2 to 2.5 billion shares at this time, and we got a whole lot of nothing. So tested a previous high, did so on lighter volume. We did so on many other things too, which we'll get to.
And it's all just a little bit of history repeating.
On this day in 1986, 10 years after the company's founding, Microsoft Corporation stock goes public at $21 a share. The stock, which eventually closed at $27.75 a share that day, peaked at $29.25. Shortly after the opening, it said that the rising value of Microsoft stock has made it an estimated 4 billionaires and 12,000 millionaires in the company alone. The thought is also that somewhere in the neighborhood of 8,000 millionaires who bought the stock that day and sold it later on. So, yeah, a lot of people say people are good, do good. But what do you think? Not Steve Jobs, that The founders of Microsoft did more good for more people than everybody else combined over the last, 40, 50 years? I think so. A lot of people just pursuing their own ends, giving a lot of people jobs, paying taxes, moving along. But I get a lot of people that hate corporations for some reason. I'm unsure why. All of these people, not a corporation, actual humans, but working for a corporation. Who knows? Okay, so what do we have? Let's go ahead and go to the charts. So wanted to start going through a list of these. A lot of them I had in the newsletter this morning. But I just want to beat it into you. Where a lot of people say, well, volumes don't work. They do. I'm going to say that things over the last 20 years of volumes have significantly changed. I think part of that is computer-operated computer trading. It used to be that if you got an ETF that tested a previous high on 10%, it was toast 2 days later. That's slightly changed. Now I kind of look for 25% changes in ETFs, and I start looking at 50% changes in volume at highs or lows for stocks and equities. ETFs, 25%. 25% in an ETF is like 50% in an equity. Statistically, about the same. So when you see something like 4 million shares in Aaron's Rents, AAN is the symbol on that, July 31st, 4822, 4 million shares. You see this volume in the last couple of days, 712,000 shares. Today, a little spike out here with 261,000 shares. So you go back above it, you're going to close back below it. Energy off these last legs, as we've been showing the last couple of days, just hasn't been much of anything. We'll go to AMAT, Applied Materials. And AMAT, as we were showing some of these, volume wasn't as bad as you might think. We had 18 million shares 2 days ago, 16 million shares yesterday, 10 million shares so far today. But that's going up against the 27 million share high of November 17th. A lot of stocks, a lot weaker than AMAT. So I'm not telling you to go and sell that, but short it. But if you're looking at the SMHs and stuff, I'm thinking that we found some fairly decent moves. I think we talked, did we? I don't think we talked about this one. I think we talked about how I love stocks that have been weak and blown apart, get back halfway into a gap and then give it up. Kind of seeing that in AON today, AON. Your gap down occurred on about 1.5 million shares. You've tried to get back up into this range at about 147, 148, and it's failed twice so far. Energy on this last leg, a little better than it has been, but again, you get about halfway into those gaps, and that's where maximum resistance is going to be. Another one that fell apart back on April 28th of 2017, April 27th, came down with 3.9 million shares, trying to fill that gap on January 25th with 2.6. But guess what? You get one more test up here. Yesterday, 681,000 shares. Today, just 260,000 shares. So there's a lot of stocks that worked their way back up here, even had a fairly decent push in January. Still short of the volume, got one more push back up here. And this is how kind of longer term, medium, let me put it this way. I won't say longer term. I'll say medium term highs get put in. You can give me a call, of course, at 877-927-6648. And, of course, you can always email me at path@tfnn.com or put a message in the den. Bank of America. Well, they're not coming to America. Looks like they're leaving Bank of America. February 2nd saw a high of 104 million shares at 32.67. Spiked that yesterday with 60 million shares. So what are we, 44 million shares short yesterday? Pushed a little higher this morning, got 38 million shares. And again, these financial companies are actually some of the stronger ones out here. These last legs have been kind of puny, though, on all of them. Bottom Line Technologies, symbol is EPAY, EPAY. 1 million shares spike on February 2nd, 39.50. 1 million shares. So what did we get yesterday? 308,000 shares as it breaks the highs, closes below it, and you get the pullback today. Now, am I expecting the wheels to instantly fall off the wagon of some of these stocks you've never heard of before? The answer is no. But they will probably be some of the weaker performers if things do accelerate to the lower side. Okay. 2774 is the last tick I see on the S&P. Flowserve fell apart, a huge gap down on the 27th of July of 2017, 1.5 million shares. You've actually hit this with fairly decent volume. You just can't get past this resistance level at 46, though. Yesterday, volume was what? 1 million shares, pulling back a little. Anyway, we're going to go to the break. We'll be back in a minute. Give me a call, 877-927-6648.
Exit! Stage right.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So we'll see how it comes in. Again, just no volume, big clues at these previous highs when everything falls out. We're just turning 1.6 billion shares now. So just keep an eye on it. Anyway, as we were looking for these, got a few questions out here about Qualcomm and what is the whole deal on Qualcomm and Avago and the Prez saying that no way, Jose, to Avago. And it seems like from some of the stuff that's leaking out in some of the other pages that we've, at least the U.S. CIA, has kind of come along some information that certainly looks like Avago is kind of a stalking horse for the Chinese communists, and that if they did give Qualcomm give Qualcomm to Avago, that the first thing that would happen is why they may be a U.S. company, everything would be given away in China, and China would own 5G, and they pretty much destroy it for the rest of the United States. The other part of it is a ongoing effort by the Chinese security forces to put a bunch of phones out there that are compromised. Huawei, Huawei, like Hawaii, but it's Huawei, I think so, something like that. Anyway, those phones have been coming with pretty much guaranteed hacking capability by the Chinese Defense Security Forces for the last year, and they will not allow anybody in the military or the government to actually have those phones. They pretty much got Best Buy and the rest of the major retailers to quit buying them. And they also got the almost all the IT staff in the world to quit using their routers. So pretty much obnoxious case of spying. But it seems like some of the stuff I've read in the last 24 hours really is accelerating what these folks were doing. They thought that they could wipe out Qualcomm, and by doing that, own the whole market and force us out, and therefore have the ability to hack at will with phones that were compromised since their manufacture. So, what do we have? Well, we got Apple kowtowed to the Chinese communists too. And right now, I haven't talked about it too much, but all the keys for all the phones that are made in China are in China, and the Chinese government can look at them. Pretty stupid thing to do, in my opinion. I know why Apple did it, which they think that they're going to be able to get into China, and all they've done is cough up all the goods. If you watched the movie about code breaking in the Second World War, a lot of what they did was because they got a toe in the door, the equivalent of the camel getting its nose under the side of the tent. But a handful of weather stations would always start with the same preamble for the weather each day. And that was enough for code breakers, even by hand, to start breaking codes that had billions and billions of combinations. Well, guess what? They've got every one of the phones, Apple phones, information for cracking them. So does that mean they could instantly crack them? Probably the answer is no. But it does mean that they have a lot of those breadcrumbs to go find out and how to do it if they haven't figured out already. Physical access to a phone has never been a problem. It's always been being able to break into the phone remotely without the customer knowing. And for me, the whole thing with Qualcomm and all the stuff I'm reading now all circles back to that. And the question of whether or not you want the Chinese communists to have the keys to your iPhone. No real saying of whether or not, if they got a Qualcomm phone or one made by Intel, that they're doing the same thing. But I would imagine if Intel gets one to do it, then they'll try to leverage everybody else to do it. But as somebody said earlier this morning, it's an all-out war. It may not be the war that we are familiar with in the past. We had a Cold War, but this is maybe it's a security war. I don't know. Someone's got to come up with a good name for it. Anyway, Qualcomm not going to be able to be sold, not going to be able to make any deals with Avago, and I think this is just the first step in many in regaining some of our sovereignty and certainly keeping semiconductor design and manufacture in the United States as a issue of national security. Who got the Enigma machine for the Brits? Well, there were several of them, but the first one they got was an older one in the First World War. They sunk a ship in like 20 feet of water and it never went down. And they were able to get some of the initial Enigma-style machines off of it. Later on, they grabbed a couple of them off of weather ships and blew the weather ships up and made it look like the ships just hit the rocks. And so the Germans wouldn't think that we got the machines. I don't think that's widely known. Yep, no monopoly power and no Qualcomm for you, Mr. Avago. Anyway, they were supposed to move over here. Avago was supposed to move over here, but I wonder if that doesn't change in the next few days. But I'm pretty sure that deal is as dead as deals go. Avago bouncing a little bit because these guys may be the most leveraged company in all of technology right now. They continue to buy, continue to borrow, and my guess is eventually the cow is going to come home. This is not a good-looking chart other than the volume for today, which spiked up to the previous high, didn't quite make it, about 50 cents light, and then gave it all back again today. The energy off this February 6th low has not been all that exciting. So the question is Avago soon going to be an enemy of the state? And I mean the U.S. Hard to tell, but I guess we'll know here in a couple of weeks or so whether anything else is going on. Some of the other stocks that had been the strongest have turned over. We're going to look at General Dynamics in a minute. Got a lot more to look at here. Great day. 2774 on the S&P 500.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Got a question, who's ahead on quantum communications? Chinese, Americans, Germans, aliens? Who knows? Quantum computers, I'll go back to the Second World War again. The first programmable computer was in 1944. Yeah, I think 44. Although for 30 years, everybody thought, or 35 years, thought it was in 1948 with another computer. But there was one called the Colossus. I think it was Colossus. In 1944 that the Brits had that was reprogrammable. And it wasn't easily reprogrammable, but neither was the Colossus in 1948. So they got the patent, they got everything. You never knew about that computer in 1944, and that's the problem right now. You're looking at the CIA, the NSA, who knows what's going on behind the curtains. We know that China's kind of bragging right now. Who knows if that makes anything better or means anything whatsoever. I know that we've been working on stuff very hard. The question is not so much can you build a quantum computer now, is can you write software for a quantum computer, which seems to be a lot of the money from DARPA and the government is going into places like MIT and Caltech to find and figure out how to write software for quantum computers. General Dynamics in this business, kind of interesting to see its test, January 29th, 299.54, 3.2 million shares, got to 230 a couple of days ago on 1.3 million shares yesterday, 1.2 million shares to the downside today, a little lighter. Now, this has been one of the stronger parts of the market, but all these continue to move, and it's not uncommon to see the first couple of days to see no volume and then start looking a lot harder for volume over the next few days. Was that even a real thing? I don't think. Someone's asking me if my dad had any part in the Philadelphia experiment, and it's almost laughable because I don't think it was real. There was no Philadelphia experiment. My understanding of that whole thing was a big deal for degaussing ships that kind of went awry, and it kind of got a life of its own. Au contraire, yeah. Okay, that's fine. I don't believe that much happened there. I don't believe we went into another quantum galaxy, halfway in one and halfway in the other. Yeah, it was a degaussing ring that I think shorted out, and everybody that died, cover story. Because I don't think that even back then they wanted to know, to let people know that they could degauss the ships so that they wouldn't set off magnetic mines. Hess, a little higher today. I was looking at this one. The energy off the low is not all that exciting. So I'm looking at some of these as setting up ABCs. And this one looks fairly interesting in that ABC movement. You've done a 61% retrace through today. Again, not a lot of energy up here, but I'm trying to figure out how long-term, as we move to electricity and electric cars, how these gas stations fare long-term. But kind of looks to me like this could be a fairly nice ABC, and that'd take you to 34.49 on just a 1-to-1. So a few of these things are setting up rather interestingly. You might get to $50 on this one where there's a small gap. HXL, which is a Hexel, another one of these making kind of a, not a well-known company, but certainly a third of the volume of the January 25th high at 69.25. You spiked it yesterday with a little less than 400,000 shares. You got a doji today. You got no energy from this February 9th low. This is kind of just the whole market, either testing highs or making ABCs. But these legs on the right-hand side of these lows, mostly the February 5th through February 9th, just didn't have a whole lot of energy. IHS market, which symbol is info, 49.19. The January 25th high had 3 million shares. We got into it yesterday with 1.3 million shares, so it didn't even do half. Light volume out here, a little under 800,000 shares so far today. CLAC, a few more. Okay, so what did we see? CLAC, nice spike, 1.84 million shares January 25th. Got into it yesterday with 1 million shares. Spiked a little bit higher out here with 600,005 shares so far today. So again, this semi is probably a little stronger than many out here, but that's kind of what we're looking at. Got a question from Jim in Denver. He says he's got Microsoft, should have sold it today. And, that's the problem when these things are testing previous highs on light volume. You kind of want to watch it. I think we brought this one up yesterday, testing its previous high with half the volume. Amscray, I don't remember my pig Latin. What is it? Amscray, Attenlay. Maybe I'll know. Anyway, not a big surprise out here that this thing gave a lot of money. Looks like it's going back to about $90 for me, so you can make your decision on that. But yeah, you got 97. Is it probably still going to eventually to 100? Yeah, I think it's working its way there, but you might have to ride it all the way back into the 90s. So, I'd say until we get through the FOMC stuff, I think that the stocks are on sale. And so there's no reason to rush out and be buying anything and going along. A lot of banks, very weak movements off these February 6th lows. And you would think that they would be a bit stronger with the higher interest rates. Don't know what's going on. New York Community Bank, NYCB, going up its $14.41 high on January 31st. That had almost 11 million shares. You got into it with 5.3 million shares yesterday. So again, just these legs that I'm looking at here are just some of the most pitiful legs in the last 2 or 3 years on just a lot of stocks. So we continue to see that. And again, they're kind of these regional banks, and I'm not exactly sure. Maybe the whole getting rid of Dodd-Frank thing is changing the complexion between large banks and small banks again. But I'm seeing that a lot of these small banks looking fairly pathetic. Bank of the Ozarks, OZRK, 5312 from January 23rd. 3.4 million shares, got into it with 800,000 shares on the 7th of this month. It's just gone sideways, but there isn't a lot of juice over here on the other side. Okay, so we've broke through. Did we get a new day low on the S&P cash here? Let me take a look. What do we get? Not quite, huh? Almost there, within a buck. 1.7 billion shares of volume is again pathetic for a test of some major highs. So keep your hat on. Got some winds, got storms coming. Back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, what time do we have here? I don't even know where I'm at in the show today. Okay, only got a couple minutes left. We're breaking through the lows of the days. We got no volume on the upside. And as I've told you before, when these big moves come, or more medium-term and long-term moves, not uncommon to not see volume for a couple of days. So if we're looking at today as the first day, figure that you could have light volume all the way through Friday. That's why I'm kind of thinking that maybe volume actually comes in on the downside Monday and Tuesday. But, could we get to 2750 today? Well, anything's possible. I think we get there at least by tomorrow. We'll see how the end of the day wraps up. But one of the things I do want to talk about is the huge lack of liquidity. Every time liquidity on the NANEX web page starts popping up into third world territory, we sell off fairly quickly. So I don't know if that is enough of a cause and relationship. If you want a link to this page, just email me at path@tfnn.com. I'll be glad to send it to you. But I think you want to kind of keep this thing on the sidelines, because this is why we blew up before, the lack of liquidity in the S&P futures. It has gotten better than it was. I mean, we were down here at the Lord of the Flies level. But it's gotten slightly better, but it never got that good. And, of course, big moves happen when there's nobody on the opposite side of a trade and nobody willing to put a trade in there. And that lack of liquidity is going to be able to give us fast markets until it gets back up to what it was in the past. So just be very careful. Don't leave your screens for very long, because this is the kind of market where things can happen in a New York second. In the meantime, sell when you can, not when you have to. And then we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.